Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns, and turn it does. Another big, I guess you could say, announcement day yesterday with respect to the Federal Reserve. Today is Thursday, August the 1st. We're going to go over some of that information in the next few minutes. Hey, if you're new to our channel, realize that what I talk about here is retail real estate investment, the housing market, buying, selling, home values, rental rates, anything real estate oriented that makes a difference in what we're doing as far as consumers and buying homes and selling homes out there. So if you find this information kind of interesting and resourceful, please hit the subscribe button on the bottom right of the video here. I really appreciate that. Thank you. My motto, by the way, is never pay retail. That's the whole point what we're doing here. So also feel free to reach out to me for your real estate needs. I know a lot of people have recently, and again, we're always trying to connect, etc. But I can certainly help you with purchases, sales, real estate investment, questions about the process, short sales, distressed property, pre-foreclosures, whatever it is, foreclosures. Certainly drop me a line. The best way to reach me is via email, and we can start our conversation and connection in that capacity. One tip though, if you email me, if you email me, include your phone number. So we don't have to keep going back and forth, okay? So once I get your phone number, I can text you, we can set up a time to call. So appreciate that. Hey, one thing I want to announce today as well, I'm working on I guess you could say, new education program, and it's the Never Pay Retail concept. It's a training program. It's designed to really help everybody out there with their real estate needs from both a retail perspective and an investment perspective. I kind of blend some of the concepts here because I think some of the tips, tricks, and techniques that I use can certainly benefit people in the retail environment. So the whole idea is to pay less for property, to pay less for your mortgages and your closing costs, everything that's out there. What can you leverage? How can you push value down so you can get the best price available? So I'm in the process of developing a course right now, and I'm looking for about a dozen participants, and I want to qualify this right now. It's a paid for course. It's not for free. I'm very good at giving time to people to talk, etc. But this really is more of it's going to be a launch product the next couple of weeks. So this is almost like a beta version. The whole idea, I'm looking for about a dozen people who will jump in at a discounted rate, of course, talk to me, talk amongst ourselves. And I've got a lot of framework and a lot of stuff already developed, but I'm looking for some input as to what people really need to know and understand to be more comfortable in the real estate market that will help them with their purchasing decisions, etc. So if that's interesting to you, send me an email and we'll go from there. I'll connect with you and contact and see if it's a fit for both of us. All right. So thank you very much. So again, about a dozen people I'm looking for right now. So today's discussion topics are, I guess you could say, price versus payment, all right, and what is more important to buyers. So we're going to hit that in a second here. So obviously yesterday, I don't know if anybody read or saw or heard in the news, well, the Federal Reserve, is in their meetings again, the FOMCs, and they decided to drop interest rates by 25 basis points. So that was a reduction in interest rates. Some analysts were calling for 50 basis points reduction. Didn't happen. First time there was a rate drop in about 8 years. I've seen some conflicting numbers out there, but I'm going to go with the more conservative. First time they did a rate drop in 8 years, which has been, quite some time. Okay, so Chairman Powell stated that this was a mid-cycle adjustment, and this should not be taken as a start of a rate-cutting policy or quantitative easing. Again, this was due to global slowdown concerns and what they call muted inflation. So whatever that means, but again, that was the idea, is that they dropped it a little bit just for those reasons. Now, this caused mixed reviews among the analysts and economists out there. They state that the future rate policy is all over the place, so there really is no concrete rate policy going on. Realize that when they vote for rate reductions or increases, that they vote for it. So there were two dissents among the committee that voted against a cut. So two people out of the committee, I guess, that votes on this basically didn't vote for yes for it. And the whole idea, apparently they were trying to get a consensus to drop it by 50 basis points. So that didn't help. It didn't work as well. So the only drop was a 25 basis points cut there. So there you go. So having said that, I guess the number one, well, here's the thing. Here's what some of the key economists are saying. A lot of them. So Bank of America basically said, hey, this is great. We expect 2 more 25 basis points cut this year. Wells Fargo said this was an insurance rate cut. Look for 1 more cut this year. And again, going back to the messages the Fed is sending to the financial community, Credit Suisse said this is the only rate cut, and policy should be stable for the rest of the year. Morgan Stanley are predicting 1 additional rate cut of 25 basis points this year. Goldman Sachs says there's a 55% probability of a 25 basis point rate cut in September. JP Morgan states that 1 more easing should occur probably in September. Citibank said 1 more 25 basis point cut in September is what they predict. Deutsche Bank saying that they expect 2 more rate cuts for the remainder of 2019. So when you have all these big players, you can see that the majority of the players expect at least 1 rate cut, and some are saying that they expect a second rate cut to happen. So September, in September, and 1 more either in October or December timeframe. So again, majority of players think at least 1 more is going to happen before the year end. So there you go. So how does this affect housing? And this is a big question, and I've spoken to a few people today to kind of get their input on this. One would think that lower rates would bring more buyers into the market. And that would sort of make sense. Oh, rates are dropping. Hey, now's a good time to buy. But I'm not so sure about that. And the reason why I'm not so sure, well, mortgage applications have fallen for 3 straight weeks in a row. So according to the MBA, the Mortgage Bankers Association, which they reported yesterday, being Wednesday, the 31st of July, that they said that mortgage applications have fallen for 3 straight weeks, according to them. And again, it's we're not seeing the uptick in purchases. We just released the June, pending home sales, and it was not up by very much whatsoever, despite lower rates. So that's that favorite tagline people are using. They're confused about what's going on in the marketplace. It should be doing better despite lower rates. So what does that really mean? Well, I think it still comes back down to affordability. A lot of people are stating that you can drop rates, but there's only so much price point I'm going to jump on, and I'm going to I guess I can afford, or I'm going to feel comfortable with, or maybe I'm going to put myself at risk. So it's one of those things. Could we see an uptick in buying because of the reduction in rates? Now again, this was a 25 basis points reduction. How that filters out into mortgage rates, I'm not sure early on. So that's the situation we're kind of in right now. I think it's kind of late in the season for this right now, and we've already had this sort of summer selling season going on. We've just reported back to June pending. So guess what? You've got June pendings, which aren't that great. I think a lot of the people who are buying in the summer, they're already on, they're in contract now. You have June pendings. You're going to have people who went into contract in July, and they're closing the month of either July and or August. So, I've not seen a big uptick in expectations of deals right now from the retail perspective for the summer selling season. So I don't know if that's going to make a difference with respect to what's going on. So what this will do, though, of course, is create more refi opportunities. Now, when rate drops, when a rate drop happens through the Fed, it's not like mortgage rates may or may not be affected immediately or affected at all, for that matter, according to a lot of the mortgage guys I've spoken to today. Obviously, we're going to see an uptick in refis, and that typically is what happens. Now, I know that there's always some, analysis that comes out there saying, hey, when rates drop by this much, that opens up the refi pool to X number of million more people. Why? Because they work on that. You could refi if you have a minimum 80% loan to value, and they work some calculation out saying, hey, this drops the threshold to here, which means more people can refi and take advantage of that. Now, why it might make sense, according to some mortgage people I spoke to today, is that people who maybe bought the past couple of years may have paid a higher mortgage rate for their homes, and now since rates are lower again, the refi can be actually quite attractive. So that probably will stimulate some activity from the mortgage side. But again, when you look at this, people will, they can get a lower rate, they can take cash out, maybe their payment goes up a small amount. It sounds good, which is wonderful, but I guess for me, we're going to see some of that, but that's not going to help the housing market, because if you're refining your property, so you're just re-upping another loan, and if you're taking cash out or equity out of your home, then the payoff is that much higher, And if you're refining, chances are you're not going to do what? Sell your home now. So that just, I think, impedes the growth of the housing market, less inventory, and puts more pressure on competition for prices. So we'll see how that works out. Again, this, as I said, perpetuates the issue with respect to lack of inventory. So does 25 basis points make that big a difference out there? Don't know. Some people may have jumped on a rate. Like, again, I'm going to show you a Quicken's loans. I'm not going to show you, but I looked up at Quicken loans today, and they have their mortgage rates based of August the 1st. And I can tell you that a 30-year fixed FHA loan is 3.49%. That's the interest rate, which is pretty darn good. So it looks like when you look at across the board, just go to Quicken Loans and look at their rates. Their best rates are FHA and VA. And what they say for FHA is the fact that buy or refinance with more lenient credit requirements. The low down payment also makes this loan a perfect fit for first-time home buyers. So right away there, you're going to get one of the best rates out there from these guys, and they're telling you right up front that we're talking low down payment, which I think is interesting. So it's encouraging that. So when it comes down to it, I mean, are you more concerned about your price you're paying or your monthly mortgage rate fitting into your personal budget? I mean, that's the two questions here. So, does this give more people confidence to buy a home? Yes, it might. I think it's also their perception, because, you may have been sort of waiting to hear what the Fed was going to do with respect to moving rates. And if it went down a bit, you think, okay, now that's confidence for me. I can go out and I can get a home now, and I can get a mortgage. So that could stimulate some more activity, but we're seeing it at sort of the end of the selling season. So if you're going to go look for a home right now, it's not going to give us the immediate results that people are looking for, like National Association of Realtors and stuff like that. So just realize that. Again, boils back down to the price point and the purchase. So obviously when you go secure your loan, your mortgage, they're going to tell you, okay, based on FHA loan, you're going to bring this much to closing for a down payment, and then based on our calculations, you can afford a house of this much. So I guess for me, it's almost like a double-edged sword here. So you know what your payment's going to be at the top, and then therefore you can find a home up until that value there. So does home prices versus is home price more important? It is, but I think the home price is a derivative of how much I can afford based on the kind of loan I can get. So clearly the two are linked closely, but we'll see what happens. So for me, it's still up in the air. How will this essentially affect the marketplace? I think we're going to find out in the next few months, because again, people will be out looking for homes. We'll see pendings, next month or so. Then there'll be future closings. So we'll see if this rate decrease actually makes an impact in the housing market. So if you're not aware, I put a little survey out on the community tab on the channel here. So if you go to the home part of the channel, there's a community tab, and the question really was, what is more important to you when you're looking for a property? What's the key factor? Are you looking at mortgage, your monthly mortgage payment, or are you looking at your purchase price? And just again, based on the small sampling, and I just looked at it before we jumped on the video here, 74% of the respondents said that the purchase price is more important than the monthly mortgage payments. And some of the comments are, hey, I'm not going to overbuy and put myself in a situation where my mortgage payments are higher anyway. Why did I do that? Which I can see so. But again, I'm trying to figure out what the market's going to do here, and it's always that thing: is it mortgage monthly or is it purchase price? So I think we're going to see some obviously, well, the majority, over 70%, is saying purchase price is the number one thing. Obviously, you can bust that down to, hey, the situation is that if my maximum purchase price is here, I know what I'm paying mortgage wise. I mean, that it's all correlated, but I believe in the end, I still think affordability is our number one issue, and people are looking for price point first, and then they're going to, if they find the homes they like, then they know that they can actually jump into many mortgage selections and figure out whether they can afford it or not. That's typically how it works. And when you're working with real estate agents, if you're a buyer, the first thing that they ask is, are you pre-approved for a mortgage? The reason why that's important is because nobody wants to run around and show you homes or do work for tire kickers who really aren't qualified to buy a home, or they're looking above what their means are. It's a waste of time. So, if you're buying a home, ultimately you need to figure out what you can afford here. So that's a scoop on that. So again, not a huge sampling, but right now we're looking at about 74% of people say that it's, the price point is what's driving as the key factor driving their purchases right now. Now, something interesting here too, with respect to the down payments, I want to go into this. There's a Freedom Debt Relief is a website you can go to, and they put out surveys every so often. They got some good information. Well, they actually had they polled a number of people, over 1,000, and they said, what was the down payment on your home? You'll see how this factors in. So I can tell you that out of the 100%, 13% had zero down payment, 28% down payment were between 1% and 5%, and 22% were between 6% and 10%. So we can see that if you look at that, that's 63% of the respondents paid 10% or less. The majority, so that's 41% paid 5% or less. So that's actually, down payments are coming down. Really, when you looked at it, only 15% ended up paying more than 20%. So you can see that the mortgage or the down payments are shifting to more lower down payment mortgages. I know that obviously FHA encourages that. We can tell by looking at the 30-year fixed FHA having the best rate on Quicken Loans right here. VA rate the same, 3.49. So you can do VAs with no money down as well too. So listen, if you've got the ability, why not use it? But the point is that we can see the trends here. We know that FHA and VA are doing more and more loans. We know there's more banks, non-banks out there offering different structure type loans that are low down payment. And we can see just based on this survey that a lot of people are paying less. But again, when the bulk are paying 5% or less, that's 28%. And when 13% have put down $0, that's certainly telling the fact that there's certainly interesting things going on in the mortgage industry to help stimulate buying. But in the end, based on recent statistics, we still haven't seen upticks in buying from a volume perspective. Obviously, from the report of the day, there's still we saw our first kind of crack in the housing value market chart, with Seattle actually losing value this year. Everybody else is it's the appreciation slowing down. So you can see that this is certainly having an impact. More and more low down payment people are being capped out as to where they can buy, and that's obviously going to affect price points and things like that. So very, very interesting. So thought I'd pass that along. One thing too, FDIC. So interesting note here, the FDIC, which is the Federal Deposit Insurance Corporation, actually put out today warnings of key credit risks to the banks. So they warned of potential credit and market risks that market participants should definitely heed. So I guess they put a report out yesterday. They talk about a lot of different things: energy sector, commercial real estate, other things as well too. But excuse me, the comment on the housing was all banks should be focusing on the housing sector because it is slowing down. According to the FDIC, signs of a slowdown in sales are emerging in the housing market, even as house prices continue to rise across most of the nation. Affordability is the growing concern as income growth lags the rise in house prices and mortgage payments. So they're already saying, as I mentioned in the videos before, people see this. The banks, the servicers, the non-banks, they see what's going on. They see they see the demographics. They see non-payments already happening. I was looking forward to some foreclosure data that should be published any day now, and it's not. So maybe people don't want to talk about that. I don't know. Obviously I can pick up some local data and Florida data, but I'm not seeing much going on. I'm not seeing any intel on what's going out there. I have some stuff here and there I'm picking up on. So the foreclosure market is still robust, and I think will be increasing. We're probably going to hear about that soon. So that's at least, so the FDIC is kind of warning the banks, saying, hey guys, you need to be cognizant of this because we start seeing some signs here. Now they say, unlike the mid-2000s, the banks are less exposed to residential mortgages, and there are new mortgage regulations. So if you want to go back to the whole qualified mortgage, that's where a lot of the people who don't believe we could ever be in a housing bubble are saying, too bad. That's not going to happen because we have qualified mortgages. But again, you could have a great credit score, but you have no down payment and a high debt to income ratio. So if things change, credit score does not necessarily indicate, your ability I mean, it's history, but that doesn't know what's in your bank account and what you're earning. Okay, so that's the scoop. So the things can fall apart even though you have good credit scores. So they said banks exposed to the residential mortgages should be reviewing the credit quality of their portfolios as the economy continues to slow down. So that's the scoop. So just realize that we're getting these little signs here and there. So people, the realtor groups, and they have to support their members, 1.3 million members, mortgage companies, PMI companies, insurance companies, people that gain their income from the housing market are I think we're seeing them sort of grabbing at straws here, saying it's okay, things are going to be good, buy now, it's going to be worse and more competitive in the fall. Well, I don't know what's going to happen, and again, seeing the recent pending information wasn't outstanding, doesn't show me that suddenly there's a whole slew of people vying for a bunch of properties. That actually tells me the actual difference, to be quite honest with you. So again, you got to support your own, and I fully understand how that works. But we're, at least from this time around as opposed to last time, there's much more discussion about it, much more, there's warning signs, etc. So people are more open about what could potentially happen. Whether everybody believes it or listens to it or does things to avoid it and heed the I guess you could say the message is to be determined in the near future. So that's a scoop on that. So again, the summary for today: Fed drops the rates 25 basis points. Will that make a difference to home buyers? I don't know. I don't think so. Based on from what people are telling me from your viewership and the surveys and what I hear, clearly refis will pick up, but home ownership is still a stretch for people with respect to affordability. So I don't think what we saw as far as a rate reduction will be that significant when it filters through to the actual mortgage rates. That'll make that big a difference. That's my opinion. But I stand to be corrected if that's the difference in the future. So anyway, guys, appreciate the time today. Again, appreciate the views, the likes, and the comments. Reach out to me for your real estate needs. I appreciate that as always and love to talk to people. If you're not already a subscriber, please subscribe and help the channel grow. And again, I'm thankful for that. As I mentioned, if you're interested in getting involved with my Never Pay Retail program, drop me an email and I can discuss it and engage you right away. So thanks, everybody. Look forward to probably talking to everyone next week.